Saint Wealth Limited versus Bureau of Internal Revenue, GR number 252965, December 17, 2021. Facts of the case. PD 1869 was enacted in 1983, creating the Philippine Amusement and Gaming Corporation, or PAGCOR. In 2016, the country started regulating Philippine offshore gaming operators, or POGOs. Thus, PAGCOR issued the IRR requiring POGOs to register. Upon registration, the POGO is given an offshore gaming license, or OGL. Entities who may be given an offshore gaming license are either number 1, Philippine-based operators, or number 2, offshore-based operators. Philippine-based operators are corporations organized in the Philippines, which will either conduct offshore gaming operations themselves or engage the services of PAGCOR accredited service providers. Meanwhile, offshore-based operators are corporations organized in any foreign country which will engage the services of PAGCOR accredited local gaming agents and or service providers for its offshore gaming operations. POGO licensees are required to pay several monthly regulatory fees. Thus, from these regulatory fees alone, PAGCOR is able to generate billions of pesos in revenues. Bureau of Internal Revenue issued RMC number 102/2017 entitled Taxation of Taxpayers Engaged in Philippine Offshore Gaming Operations. POGOs in this regulation may either be classified as licensees or other entities. It also outlined the tax treatments. Here, it provides that licensees must pay 5% franchise tax in lieu of all other taxes for their income arising from their gaming operations. Such franchise tax is based on their entire gross gaming revenues. Meanwhile, for income arising from non-gaming operations, licensees must pay normal income tax, value-added tax, and other applicable taxes. To implement the regulation, BIR issued RMC 78/2018 entitled Registration Requirements of POGOs and its Accredited Service Providers, which reiterated that online activity is sufficient to do business in the Philippines and considered POGOs as resident foreign corporation engaged in business in the Philippines. As such, POGO licensees were required to register with the BIR. BIR issued RMC 46/2020 entitled Guidelines and Requirement for POGO Licenses and Service Providers in the Application of a BIR Clearance for the Resumption of Operations. Then, BIR issued RMC number 64/2020, revising RMC 46/2020, which stated the following among others. It stated the conditions, the registration with the BIR, payment of franchise tax, remittance and payment of withholding tax if applicable, submission of notarized undertaking to pay tax arrears. Documentary requirements. It requires submission of application for registration of corporations, franchise tax returns, monthly remittance form for income taxes held, and notarized undertaking to pay tax arrears. Bayanihan 2, entitled An Act Providing for COVID-19 Response and Recovery Interventions and Providing Mechanisms to Accelerate the Recovery and Bolster the Resiliency of the Philippines, providing funds therefore and for other purposes, was enacted. Section 11 mentions a 5% franchise tax based on the gross bets or turnovers earned by POGOs to implement the Bayanihan 2. BIR and DOF issued Revenue Regulations number 30/2020, which provides, in Section 3, sources of funding for the subsidies, stimulus measures, and other measures to address the COVID-19 pandemic. A. Franchise tax at the rate of 5%. impose on the gross bets or turnovers or the agreed predetermined minimum monthly revenues from gaming operations, whichever is higher, earned by the offshore gaming licensees, including gaming operators, gaming agent, service providers, and gaming support providers. B. Income tax, value-added tax, and other applicable taxes imposed on income from non-gaming operations earned by offshore gaming licensees, including gaming operators, gaming agent, service providers, and gaming support providers. Saint Wealth petition assail the constitutionality of RMC 64/2020 as it violates constitutional right to due process and equal protection, fundamental principles situs of taxation, and rule of uniformity of taxation. Marco Polo petition argued the following. Section 11F and 11G of the Bayanihan 2 is unconstitutional for being riders and for imposing new taxes upon POGOs which shall subsist beyond the effectivity of Bayanihan 2. Section 11F of the Bayanihan 2 violates substantive due process, while Sections 11F and 11G both violates the Equal Protection Clause. Section 11F and 11G is repugnant to substantive due process because it whimsically disregards the principle of territoriality in taxation. Section 11F and 11G are unconstitutional because RMC number 30/2020 is also unconstitutional because it has no statutory basis. RMC number 102/2017 is void for having no statutory basis. RMC number 102/2017 is confiscatory and violates the Equal Protection Clause. RMC number 78/2018, which imposed registration requirements to the taxes imposed under RMC number 102/2017, is void for having been issued without statutory basis and for being unconstitutional. A TRO was issued in favor of Marco Polo petitioners and enjoined the implementation of Section 11F and 11G of the Bayanihan 2. RR number 30/2020, RMC number 102/2017, and RMC number 78/2018. The consolidated comment of the respondents raised several procedural and substantive issues. During the pendency of the case, RA number 11590 entitled An Act Taxing Philippine Offshore Gaming Operations, amending for the purpose of Sections 22, 25, 27, 28, 106, and 108, and adding new 125A and 288G of the National Internal Revenue Code of 1997 as amended and for other purposes, which categorically classifies POGO licensees, whether Philippine-based or offshore-based, as corporations engaged in doing business in the Philippines, and imposes a 5% gaming tax on the income of POGOs derived from their gaming operations based on the entire gross gaming revenue or receipts or the agreed predetermined minimum monthly revenue, whichever is higher. Now, the issue here is whether or not offshore-based POGO licensees are engaged in doing business in the Philippines. The ruling of the court is no. Offshore-based POGO licensees are not engaged in doing business in the Philippines. The consolidated petitioners appear to have been rendered moot by the enactment of RA number 11590 and similarly states that all laws, rules, and regulations, including the Bayanihan 2, which are contrary to or inconsistent with any provision of the same, are repealed and modified accordingly. But the court may still decide a case which is otherwise moot and academic when constitutional issues raised require formulation of controlling principles to guide the bench, the bar, and the public. The payment of this 5% franchise tax only applies to PAGCOR licensees which operate casinos and other related amusement places and excludes those licensees who derive profit from other means such as POGOs. Thus, POGOs, including offshore-based POGO licensees, are not taxed under the PAGCOR Charter. RMC number 102/2017 is invalid and unconstitutional because it effectively amended the PAGCOR Charter when it imposed taxes on entities not taxed under the law. Consequently, RMC number 78 2018 insofar as they impose franchise taxes on POGOs are invalid and unconstitutional for being issued without any statutory basis and for encroaching upon legislative power to enact laws. All three components of offshore gaming do not involve and are not performed within the Philippine territory. None of these components likewise deals with Filipino citizens. To reiterate, the placing of bets occurs outside the Philippines. The players must not be Filipino citizens or within the Philippines, and the payment of the prize also occurs outside of the Philippines. BIR has categorized offshore-based POGO licensees as resident foreign corporation. Notably, RA number 11590 likewise classifies all POGO's licensees, including offshore-based POGO licensees, as corporation engaged in doing business in the Philippines. Nevertheless, the tax code provides that foreign corporations are only taxed for income derived in the Philippines. In fact, RA number 11590 likewise categorically provides that offshore-based POGO licensees are only liable to pay income tax for income derived within the Philippines. Applying the rulings of BOAC and Bayer Nickel to the instant case, it appears that offshore-based POGO licensees derive no income from the sources within the Philippines because the activity which produces income occurs and is located outside the territory of the Philippines. Indeed, the flow of the wealth or the income-generating activity, the placing of bets, less the amount of payout, transpires outside the Philippines. In view of the foregoing, it is apparent that POGOs, particularly offshore-based POGO licensees, do not enjoy any protection from the state. To be clear, the very nature of their operations and the limited presence of offshore-based POGO licensees in the Philippines negate the concept of doing business in the Philippines. And therefore, POGOs, particularly offshore-based POGO licensees, cannot be taxed here in the Philippines. Petitions are granted, Section 11F and 11G of RA number 11494, Revenue Regulations number 3020, RMC number 64/2020, RMC number 102/2017, RMC number 78/2018 in relation to POGO licensees are declared null and void for being contrary to the Constitution and other relevant laws.